Well, the market may be a lot of things, but boring definitely isn't one of them. We're going to take a look to see how things are shaping up in the pre-market and where we could potentially go heading into the weekend. Well, so we'll look at the indices, but we'll also take a look at ERX, for example, to see how that's performing. We should also take a look at TLT and TMF to see how those are performing. And then I'll also take a look at Bitcoin as well. So guys, if you want to see how I'm trading this, what I'm doing about it, other analyses with me and the other experts over at the Discord, the link is down in the description. The community's already got thousands of members. You guys can join it. It is a highly positive place where everybody's supporting each other in that journey towards financial freedom and building alpha in our portfolios and looking for opportunities as they arise in the markets. Links in the description, code word doctor. Keep that in mind as we go through this. So putting this up here for you, QQQ. And I talked about this rising wedge pattern for at least a couple days now. You can see the watermark in the background showing the ticker and the chart that we're at the 1 day period chart. I said we want to watch for a fall out of this rising wedge in the pre-market. So far, we sort of have it, even though we sort of saved it as of my video recording yesterday, which was before the Israel bombing of Iran, which happened to drag things down a bit here. We'll take just a quick look at the hour chart and you can see it. There we go. So when I recorded my video yesterday, we were back up inside of this and I talked about the indecision. Well, this looks like a decisive move that we could potentially be lower, but you can see some of that recovery back, that it might be a little bit overdone. Watch this low that we had over here at about 528. That could be important to us for whether or not we see a further recovery. This could just be a quick shakedown and then a recovery. It could also be something that moves a bit more aggressively on us. I can tell you that 533 is highly critical in terms of the major pivots that we have for the highs and lows. And then not until all the way down at 522 do we get another major pivot for support down here as well. So if we go to the upside, watch 533 for that test. As for middle ground, 528 is about that number. And you guys can see that we've sort of been sitting on top of that for a lot of price action. This dip down here, down below that 528 number before a rapid recovery, trying to near those all-time highs. You can also see what happens up above 533. You can see the big rejection that we got back on the 5th. You can also see the time that we broke above it on the 10th, all the way over until we fell back down below it on the 11th. And then we peekabooed up above it yesterday in the market. So if we break that 528, watch for a retest of 533 if we get that sort of recovery. If we fail to break that 528, watch for that push down to 522. We might not move that much. We may have already made that move. We'll have to see if we kind of go into the weekend a little bit mixed. But honestly, next week's kind of a big week as we have, well, probably further tariff news, maybe some more developments geopolitically. And then we also have the Fed coming out. We'll see hawkish, dovish from them, and also the summary of economic projections that talks about what the Fed is seeing in terms of inflation. Based on what we've seen so far from those tariffs, what we've seen from the inflation report themselves, what they're going to tell us about what they see going on for the labor market. Are they going to signal further economic strength? Are they going to talk more about labor market weakness, or is it something to do with the federal funds rate that they just don't plan any cuts whatsoever? Maybe even they see it ticking back up through the end of the year. Really, anything can happen. The 18th is an absolutely monstrous day. And so we'll see with everything going on. It wouldn't surprise me if we did sell down a little bit. So near term, this is sort of concerning. We want to watch and see what happens for us. And is it enough concern to push us down to 522? We're going to have to watch and see. I have my short hedge positions out there because of such a thing. And I'll talk about those in a moment. One of those is through SQQQ. Should do all right today, putting some green back in my portfolio. And it is a hedge against my long positions because they will suffer on days like today. And those gains, losses might not, well, I should say the losses today, a lot of them are going to go unrealized, and it's just going to be just more market movement, especially in my investment portfolio where I just kind of buy and hold and just wait things out over the long term. But in the near term, I will take those trades in my trading account. I will absolutely take advantage of everything that I can, including setting up for those shortfalls as we near those all-time highs. Already had some of them set up. They should print today unless we get too rapid of a recovery, in which case, well, then they go away, but it's just a small amount of capital, and then my longs should actually make up for any capital lost there. So going over to SPY, button up against 599, that's the critical line that we're looking for the S&P 500's ETF here. SPY If we can break over 599, we want to watch for a rise, see if we can get back into this rising wedge pattern that I also talked about for QQQ. They look very, very similar. So far, we're outside of it. If we get a retest and then drop, we don't necessarily have to retest. We do, by the way, have another major pivot right in here, have that labeled for you, and we'll drop back down to the hourly chart so we can see what that looks like for SPY. And that happens to be this line that's down here that we just punched through when the pre-market opened, and then rapidly recovered from that back up to 699. And you can see over the past few days just how critical 699 has been. And it looks like up to the top side, if we can break it, the line in the sand is probably around that 605 number that we tried to punch through before and just couldn't quite get it. So we also have this trend line to watch out for resistance as well if we do break to the upside when the market opens. And oftentimes when you open low, you usually rip higher, and then things get digested and replan from there. So we'll watch and see what happens for us. Again, 599, 600, you can count them as the same number. It's close enough. That has been a line in the sand, so watch it. If we fail to break it, watch 595. And if we fail to hold that, then watch for support all the way down at 591. That's that next major support that we have. For IWM, the Russell 2000 stocks, when things get risky, man, you can see on this chart, this is the hourly chart that we're looking at. IWM, there's the watermark and the ticker. The ticker and the time period there fell right down into that area of support that I had been talking about in my videos. So they are suffering the most for geopolitical risk, for anything in terms of inflation that we might happen to have, especially with the energy prices. So here's ERX, which is the energy bull ETF. So this one is already a 2x leverage, and then options on top of making it worse, taking a huge jump up like 5 or 6% so far this morning. Here we'll go out to the daily chart where you can see a little bit more of that pre-market action, that gap up that we have that fills the gap that we fell down through, going all the way back to April the 3rd, where things kind of fell off, and now making that rise back up. We'll see if we get a further push, especially if we get a continuing escalation. ERX could do very well. So these energy stocks, they will be inflation drivers, and that's not necessarily a good thing to set up right before the Fed meeting. It's also not a good thing for those Russell 2000 stocks, so we want to watch for it. The risk assets will suffer, and IWM, those Russell 2000 small caps, are part of that risk. It's certainly more risk than what we get for like the S&P 500 companies or the NASDAQ 100 companies. And that's a nice segue into, well, let's talk about Bitcoin. I don't have the chart, but here we'll put up the chart for you. It'll only take a moment. So when we look at Bitcoin, actually I'll click on it here, perfect. So you can see that the risk asset, the news came out yesterday, we just ripped down violently down to the 50 EMA, recovering a little bit just like what we saw for the major indices for the US stock markets being risk assets. Bitcoin showing us a little bit more of that risk. Ethereum taking a little bit more of a hit as well, down a little bit more than Bitcoin, still down 3% from the previous close. But once again, you can see that movement down, the risk asset suffering. But then I showed you the energy, the 2x bull through ERX, that one doing very well this morning. And if we talk about things like TLT, talking about the 20-year treasury, that one moved up yesterday. Kind of sort of okay at the moment. We'll see what happens with it. I do think that there's some further upside coming. We have some nice rise going into this here. Let's take a look at the hourly chart. Boom, there we go. So we absolutely want to watch the yields, and you can see that we're pulling back a little bit on this one. Had a nice green candle while the markets had red candles. So this would be more of that risk off environment. The trouble that we have with US Treasuries, of course, is the debt burden that the US already has. So if we were going to drastically further that debt burden, that could be a little bit troublesome. But I still do think that it's at least watching the technicals for how it's playing out, and then we could plan that accordingly, not just writing them off and ignoring them. So TLT I'm watching, along with the US 20-year Treasury yield. That's going to move inverse because they're directly inversely, well, my goodness, not directly and inversely. I'm a math guy, and that those two are conflicting statements. They're mutually exclusive of each other. But we have an inverse relationship between the yields that we have for the bonds and the bond prices themselves. That relationship is perfectly well known, and it is an inverse one. So as one goes up, the other one goes down, and vice versa. TMF is going to move in an outsized way to TLT. So watching the technicals for TLT, watching it for the US 20-year Treasury is going to inform us on what we can do with TMF, if anything at all. So guys, I told you about that Discord. The link is down in the description of this video. Make sure that you check it out. If you like my commentary, if you like the idea of having that supportive community, that panel of experts there to help you with your financial journey towards freedom, financial freedom, or whether it's towards just adding extra alpha to your portfolio. We're over there with news, opportunities, technical setups, trade setups, the actual trades with the buys and sell receipts that you guys can see them. So you can use it to see the conviction that we have, and you can also use it as part of your due diligence. We have the bread bot that can tell you when those big moves are coming for your favorite plays, AI tools, advanced charting tools, and like I said, that community of thousands of members. Also live trading, Stockmo going live today at 2. I should be able to join him. So I'm hoping, got my fingers crossed that I'm able to do that at 2 p.m. to 3 p.m. We'll be doing some trading with some 0 DTE. So if you guys are interested in seeing live trading happen as well, you guys can watch that unfold over at the Discord. Make sure that you sign up for the earner tier using the code word doctor so that you get access to everything that the Discord has to offer its community. And if you guys want to learn about the technicals that I'm sharing with you, just how important is it? What does it mean? And how am I supposed to trade off of this? And also a trading strategy like the bread recipe that I personally use, and how I use options to get outsized gains in my portfolio and really get that alpha pumping so I can fill out my long-term positions with it, my long-term investments. Guys, there's coursework through Stockmo Academy. Code word doctor is also going to work for that as well. So when you check it out, whether it's options, technical analysis, I honestly recommend both because the one will directly inform the other one in a very, very nice way. They're perfectly complementary courses. Code word doctor is going to work for those. Bundling is also going to get you the best value possible when you sign up for the technical analysis course and the options course at the same time. So guys, let me know down in the comments of this video what you think about the indices. Are we going to see that pump today? Are we going to see things trade lower between the geopolitical tensions that we have and then also what's coming up for us next week with the Fed? Or are we just going to recover and just kind of go about our business, go about our day? Which one's more likely to you? And I'm sitting here watching the technicals as they unfold. I'll be trading accordingly, and I hope to see you guys over at the live stream should you join that Discord, or maybe you're already even part of it. Thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.